Welcome to TradeTheMBI.com. This is John's reports for the 9th of October. Well, no shock here from our DOC spread. We can see the continuation of this soft decline. I mean, I wouldn't call it anything dramatic. We've come to the 50% every time we hit these key supports, bounce right off them. In this particular case, we got right back above the 61%, pre-market here fluctuating right around below it. The reality is we could see some support here. We haven't dipped below the red line yet, particularly at the 50%. We've now hit it twice. Third time should be a great charm, so to speak, for the testing of it. The reality is short-term buyers have been the only thing holding this from a complete collapse, but now we're reaching oversold. So you're going to be oversold and very relatively close to the highs. Even if we comparatively shrink this chart down, you can see that this is not much of a decline. I mean, basically you're just a little bit into the lower part of the breakout from August. That's it. Which, if I may point out, the positive extreme was right there, 2881. So, hey, I know, happens all the time because that's why I created them, because it works. It really represents exactly what they're looking to do over much broader time, bigger signals than most people are used to. Now, from an NQ standpoint, you can see it's systemically much weaker. It's really retracing all the way back to, again, those August lows from where it was. It's got a little bit more to go to get all the way down. That would be down at the 72 range. But oddly, well below the red line here, meaning that as we make new lows, it will continue to want to retrace those lows. So that's a much more problematic. You can see the much brighter spacing. We are getting to a bounce back point, though, for the NASDAQ here as we dip dramatically down. And you can see bulls have overtaken orange in this spot. It hasn't created a bull snake at this particular point, but certainly warning that, hey, downdraft could be coming to an end. The euro holding steady despite the continued issues between the EU and some of its member states and that instability. I thought I'd shrink this one down to show how long ago, and this doesn't even represent it because this break below the 113 we've expected for quite some time. There we go. Look at that, from the 15th in October, we had been fluctuating around this, and we've been talking about this for years as we had broke up into some of these higher ranges, and it was clear at that point, particularly when we reached this 140 level, that just some kind of psychosis in people's minds, that was somehow a safe play, and really the range has been between this 120, 113 as a normalized play. We've been, and when you look at it from a much broader perspective of a couple of years, you can see we've been below it, above it, and back below it. And so you kind of see the range between both sides of that equation as uncertainty continued to plague as to why the economy, well, before the election, of course, Donald Trump was stuck. And it was believed for the longest time that it would never change. Well, clearly that has been disproven, and the potential of rates continuing to rise really threatens to push this all the way down towards the 105 or even under 100 range, which that would be a shock to some people who really aren't prepared for it. And particularly if you get this kind of continuation where oil way outside the normal range, given the amount of availability. The problem is a growing economy is sucking it up faster than it can be processed, and that's a significant one. The inability of gold to really do anything is not too shocking. We talked about this move being more in that commodity of oil. Not to mention we had the short develop here with the orange popping up above. Always tends to be a clear indication that the long is over. It's always fun to point that one out because it pretty becomes clear as day as you see it over and over again. So if we start at the 5K chart here, all the way back at the beginning, weighted up with gold. We were already at the 100%. Started producing our little yellow dots, and so that was the beginning of it. Then you ended up with beautiful DOC spread, which took place right about here. What was that, up at 28.95, and we proceeded all the way down to the lows. And I mean, this gets back to what I was talking about when red gets over that 7, which happened right about here. Propels nicely. Now, this was an interesting gold setup as it was developing because it wanted to keep pushing. Even created an additional pivot as it was moving up, but DOC spread in a strong way right there with the open snake, and that was all she wrote, and that propelled us, all the way from 28.90 to the lows of 28.67, and then we started to ease off. Now see, when you're below that negative 13.5 on the shakeout, when you get those, you see how it has a little trouble because of that dip below the red line. Sure enough, came back, revisited it, but on much higher, and produced that nice little L that you see right there. Drop it down, there it is. And even that, we still came back down and retested below the low of it before finally putting in this push that gave us gold above the 50, right above the algo from the previous range. That pushed us up into the high range and left us with a series of positive extremes. In fact, now we have a new one that's right back there, 28.77. And that has a bunch of them all the way through. You've got another set that's we can just go ahead and play with some of these. Why not? Put them right there so you should be able to see where we're going to be going. Doesn't mean that we're not going to have spots in between that we fluctuate between, but still, it's a broader representation of the fact that once these algos take hold, they're not having much resistance, which is a good thing from our viewpoint because it really makes it easy to follow. And again, you know, we can go all the way back to this right here. It's like I said, right above that 7. In this particular case, minus 637 at 28.75. And you can see what price did from there as long as it remained above it. Still is threatening to break below it at this particular point. If it does that, then you can expect a further retrace. So, all in all, good stuff. I will put up charts as they are ready and interesting enough to add to the discussion of what we've been going over repeatedly for a while here. Trade well, and I will talk again with you later.